We're here for another episode of Real Life Realtor Podcast, and you're here with myself, Dennis Scott.
Vanessa Estrada.
Your favorite realtor, Sirrom Alizem.
And today, guys, we have a very, very special episode. We're here with our guest, Jim Black of INSTA Mortgage. And today, guys, we're going to be talking about everything loan related. We're going to be talking to the first-time home buyers about interest rates. We're going to be talking about how the rise of rates are affecting your buying power. We're going to be talking about some programs that All Cal Financial offers. And we're going to see how INSTA Mortgage. We're going to see how INSTA Mortgage can help you through that home buying process and some of their programs. So, Jim, first of all, thank you so much for being here with us today. We truly appreciate you taking the time to talk with us. How are you?
Thank you guys so much for having me. And again, All Cal Financial has become INSTA Mortgage, so that's why you hear the name differently. So we're very excited on a new platform, and I'm very excited to be on the call with you guys. So thank you.
Thank you. Thank you. So, Jim, we're going to get right into it. So tell us a little bit about yourself and how did you start INSTA Mortgage? How did you get into lending? Tell us a little bit about that.
Sure. When I graduated college in 1999, I was a trader on Wall Street, and I learned very quickly that lifestyle is a sprint. It's a very fast-paced job, and when the bell rings and your day ends, your day is over. Unfortunately, in that world, you're not adding a lot of value to human beings. You're adding money to mutual funds or money managers' accounts. And so I learned early on in my career, I wanted to leave an impact on people's lives, not just making money.
Right.
So fast forward to 2002, I became a loan officer, where I learned about being in a marathon and having your passion for helping people kind of be the focal point of my career. So we're lucky in real estate, you guys as realtors and myself as a lender,
right,
to be there for one of the largest financial transactions emotionally and financially in someone's life. And so I really enjoy helping people and helping people get to their dreams. And so I started in 2002 as a loan officer and have been able to help over 8,400 families with the dream of home ownership in my career. So it's a never dull moment, and every day is a new day and a new challenge, but you got to love what we do to be in this business for the long run.
Yeah. That's incredible.
And have you always been in the Santa Cruz County area?
Great question. When I started in my career, I was in Walnut Creek, which is in the East Bay in California, so still in the Bay Area. And 6 years ago, my wife and I decided to buy a second home in Aptos, which is in the South County of Santa Cruz County. And then we decided to move down here full time. So we made the transition about 6 years ago in 2016 to be here. And we've been very fortunate to come here and start a life with a 2 and 4-year-old, or now 5-year-old, and just enjoying the moments we have to live in a great area like we do.
That's awesome. Yeah.
That's amazing. Jim, I have a question. What was that catalyst? What was that moment, working in Wall Street when you realized, man, I'm just not doing any good for the people? Like, what was that thing that made you pivot into mortgage?
Yeah, great question. It actually has to do with a family event that was going on with my family. My grandmother was through her 75th round of chemo, 75.
Whoa.
Wow.
And my uncle, sadly to say, had a rare brain cancer disease and did not have a very long time to enjoy life. So I learned early on that sometimes life events happen that make you realize what it's supposed to be about. And so I've been really, what's been important to me is my core values of who I am as a human being.
Right.
I want to make sure that I can be the same person in my job or outside of the job. And when you find something that aligns you with that, you want to follow that, because that's where you'll really succeed in whatever you're doing, because you've aligned your core values and what you believe in and with what you actually do. So I was lucky to find something I enjoyed. My mentors along the way really helped guide me. And, it's hard to start in an all commission job, right?
Yeah.
It's all or something new that is an awkward situation. And I was also lucky enough in 2001 to buy my first house 2 years out of college.
Oh,
So,
wow.
Yeah, it was kind of strange. My roommates at Cal Poly became my tenants at my house.
Wow.
In Walnut
Oh my
Creek.
God.
Very
Boss
weird.
move.
Very strange.
Aw.
Yeah. So you go from maybe not being as responsible at the rental property to now being like, hey, Luke, can you please pick up after yourself? It was really weird. So
Wow.
the same people 2 years later. So I've always loved the fact that this industry, there's no cap, there's no limit to what you can do. And so I like that. And that my day is as long or as short as I want it to be. In Wall Street, I was on the West Coast, which meant I got to work at 4 a.m. every day. And was off at 1 p.m. every day.
Okay.
That lifestyle, while it seems cool to be off so early, is almost pretty isolating because the only other people that are off at the same time are traders and people in that same lifestyle. So you never get to leave that lifestyle. And just like Wolf of Wall Street, that lifestyle can be a little bit kind of wild and out of control if you're not careful. So I enjoy the marathon of what I do now because I can have a balance of life and I can leave early or I can work from home or I can work remotely versus in Wall Street, I had to be at my desk by 4 o'clock a.m. Bell rang and it was just complete chaos till 1 p.m. every day. So different lifestyle.
That's incredible.
Yeah, that's awesome.
So you know a bit about trading options, huh?
Possibly.
Okay. Let's talk off camera later.
More volatility in interest rates than the stock market today. So
Right, sure.
Wild ride for us today.
And it's interesting enough that you speak about interest rates because that segues us nicely into our first topic.
Yeah.
Why are interest rates rising? Can you give our buyers some insight into that?
Absolutely. So what's important to realize is that the mortgages, about 65 to 70% of all mortgages up to this year were pretty much backed by the U.S. government. What that means is they were subsidizing the low interest rates by buying these mortgages at such a low rate. So there was a big consumption or appetite for the government to buy these things. This going away, we call that quantitative easing, which means government buying less mortgages and mortgage-backed securities. So that means other people have to buy them. Well, to spur that change along with inflation, the government has to raise the interest rates to help keep inflation in check.
Okay.
So it's two things happening simultaneously. Inflation making rates go higher on short-term borrowing, along with the fact that the Fed is buying less mortgages. Yeah. So if inflation is 8%, if I buy a 30-year fix at 4%, I'm losing 3%, at least in the short run, and that's not a good investment. So that's why you've seen a major increase in mortgages because investors, savvy investors, aren't willing to lock up their money at a lower rate. They want a higher rate of return, especially because the government's no longer subsidizing those lower rate purchases.
Right.
Does that make sense?
That makes a ton of sense. And so what you're saying is there are more investors right now getting active in the market than ever.
So what happens, yes, you have investors will get more excited to buy mortgages as the rate of return goes higher. So that's why you're seeing the rates skyrocket so much is the government's kind of said, hey, we're pulling back from buying these. So let's let the private sector or the financial markets buy these. And the smart Wall Street guys don't want to buy this because they realize they'll be upside down. Inflation's again 8% or higher. Why would you want to lock in your fixed return for 30 years at 4%?
Right.
You're going to be upside down for a period of time, and maybe over time that gets corrected. But that's a big gap right now. So you're losing a lot of money. If you think about the billions and trillions of dollars, that's a lot of money that you're losing in that hedge or that investment.
So for the regular buyer, though, how does that affect their buying power? Now,
great question.
I like to spew this stat. Each in an interest rate, they're losing 10% buying power. Right now, with mortgage applications at a low right now, interest rates today, I checked Freddie Mac and it's at 4.72% right now. So how does that affect the buyers?
So the buying power is a big portion of things. What you normally in a perfect economic balance, increase in rates would mean decrease in buying, which would mean more inventory would come on the market.
Right.
Well, the tough part right now is that we only have about 880,000 homes for sale. This is in early April 2020 throughout the entire country. 880,000 homes total throughout the entire country.
Right.
So there's still 4, 5, 7 people that need to buy that property because they have nowhere else to live.
Yeah.
What was different between today and 2008, when it was a tough time for us to be in the market, there were 6 million houses for sale.
Whoa.
And there was 12 million less households.
Wow.
So think of all the millennials that are out there. That represents about 30 to 35% of all buyers right now. And it's going to represent about 40 million workforce employees in the next 10 years. So that's all. We have many more households being created, and the housing starts have been less because the government, the states, the counties all charge a lot of fees. They don't make it user-friendly for builders to help build. And if it costs $60,000 to build one unit, do you think they're going to build a unit for $300,000, or are they going to build a unit for $3 million?
Right.
Yeah.
And that's kind of like in California too, right, Jim? So in California, we're seeing a lot of people don't have homes, right? And so there is a housing crisis already. Mm-hmm. So then when you couple that with people who are actually trying to buy homes, and when you're running into regulation issues and then the increase in rates, it's like, what is the best, how do you coach people that are coming to you that may, think about they want to save, because they want to come with a big down payment, so they have to pay the PMI. But like, how do you coach them to let them know, hey, look, you can continue to wait. However, the longer you wait, you're actually losing your buying power and you're running the risk of actually not being able to get into what you want.
Yeah, great question. So we call that the cost of waiting, right? It's just a simple mindset to have. I always make sure a buyer in today's market has a 10-year horizon looking forward for what they're buying. Mm. If you're only going to move for 2 or 3 years and try to flip a property, probably not the right market to do that in. Mm-hmm. If you have a 10-year horizon, then it makes sense to buy a home, because all of your wasted rent you would have would be, there's no value for that. So you're chipping away at your mortgage when you have a principal interest mortgage in a home that you own, which is always a better investment. The silver lining on rates going higher so drastically is the government could also change their position and shift back to buying more of these loans.
Right.
If that's the case, then there may be an advantage down the road to refinance. Okay. Either way, we're always going to try to pre-qualify someone about 1% higher than the market conditions today. So we can do 2 things: give people a comfort in worst case expectations, and also support people like you guys that are out there in the trenches, making sure that someone's qualified in case there's a multiple offer situation, right, or if rates go higher. We gotta support you guys. A good loan officer is your partner in helping give good guidance to everyone involved. So that way, we're not qualified at 2.5% rate. We're qualified at 5% rate, just so everyone's comfortable with what's going on.
Right on, man. Thank you for that.
Yeah, that's awesome.
For sure. So what you're saying is you don't suggest that buyers purchase now to then turn around and flip within the next 5 years? Is that due to interest rates?
I think the next 2 or 3 years, I would be careful on flipping properties. Mm-hmm. There's actually some legislative changes out there that could potentially also harm people that are doing that. There's a law in California bill that's trying to be passed at the state level. Their goal is to tax 25% higher taxation on people that flip properties as investment properties in the next 3 years.
Whoa.
Wow.
So that means that the margin has to be even higher to do that to make it worthwhile. So I think right now is a good time to buy for the long run and just be okay with rates going higher or values even being flat for a while, because the shortage of housing will take 3 to 4 years just to catch up. If they were to build at full speed and full capacity, it would take 2 or 3 years to catch up.
Wow.
So you have to weigh that cost of, do I wait? Are interest rates going to stay where they are, go higher? What do I do? And so to me, people need to live somewhere, right? You can't go live, on your friend's couch forever, or your parents in your parents' basement.
Yeah.
Unless it's a comfy couch.
Well, that's also right. That's also another good question or a point to bring up to them when you're talking to them about, when they would be ready, because a lot of folks will be like, hey, I want to wait, maybe next year. But really kind of like hearing what you're saying, well, it may not be next year. It may be 3 years from now.
Yeah.
So are you okay with waiting until 3-4 years down the road to buy your home? And most people are like, no.
Right.
They want to get in now. So
most buyers that I was working with, they're like, I should have bought 2 years ago, when they thought like, oh, I should wait and see if this levels out. And now it's like astronomical, and there's like no way.
Seriously.
The other key to think about are life events, right?
Right.
I had a family that had triplets. So they went from being in a single family, 1-bedroom condo to being like, Jim, we need like 3 bedrooms right away.
Wow.
So there are life events, good, bad, different jobs, losing your job, getting married, getting divorced, death in family, having kids. All those things play a role, and people forget that life events happen, and no matter what the rates are, people sometimes need to do things for their life events. So
For sure.
that's something to be aware of that people forget a lot.
Definitely. And Jim, a lot of people are thinking that a market crash is going to happen similar to 2008. All the stats that I've been looking at says otherwise. There'll be more of a correction. What are your views on that?
I think the supply and demand plays a role. Where we are specifically in Santa Cruz County and the coast, there's not a whole lot of areas that people can build anymore.
Right. True.
Exactly.
So I think you'll see areas that can be affected differently. I'm afraid for areas like Phoenix, Sacramento, other big metropolitan areas that have the same subdivision type of product that they can build out more of. I'm worried about those values in those areas because they've seen a major appreciation. And those people are also having bigger income issues when rates go higher, right? The average income in our area is about $95,000.
Right.
That, and this is in Santa Cruz County, that only lets you buy about a $600,000 home.
That's so sad. That is incredibly sad, to be making damn near $100,000 a year and you can't afford to live in Santa Cruz.
That you're working in. Mm-hmm.
So like you have to either like, hey, we got to do this together, baby. I don't like you, you don't like me, but we need a house.
People are finding different ways to live, and ADUs play a role. Multifamily properties. There's a lot of California is trying to help homeowners build out ADUs and make it easier to do that. Who I feel the worst for, to be honest, are the seniors that have lived in their house for 40 years that are on a fixed income and they're stuck in their homes.
How can INSTA Mortgage help the seniors, in this market?
Great question. So I always want to make sure that we help seniors and veterans. To me, those are the two most important people we can do our very best for. Veterans, for obvious reasons, for protecting our country and giving sometimes their lives for our freedom. And number two are seniors, where a lot of seniors don't have a lot of abilities to increase their income, right? If you're 80 years old, you're probably not investing in Bitcoin, or you're probably not making a whole lot of money right now. So you're on a fixed income, right? You're probably on Social Security and maybe a pension if you're lucky.
Yeah.
Well, those people are trapped in their house. So what I mean by that is I have a client I helped on 41st Avenue, which is in Capitola, near our area. She has, she's in her 90s. She has her daughter living in a RV in her driveway. She's rented out another bedroom to a millennial just to be able to afford to live.
Damn, that's sad.
She's sitting on $2 million of equity, but her family won't allow her to use a reverse mortgage to let her lifestyle be more flexible and have much more equity and basically resources available. So reverse mortgages can help people unlock their equity if they're over the age of 62 years old. And it means their mortgage payments are deferred in their loan amount. So it gives them a big cash flow relief. And in some examples, we can actually give them a monthly stipend also, or a cash out to help infuse their needs. Because as you get older, you have more special needs that you may need. Maybe you have a nurse helping a few days a week. Maybe you need someone to drive you around. Whatever those needs are, I think someone that's lived in a property for 40 years should be able to use their equity to help them continue to live happily and help be flexible to their needs. And it was sad in this example because the kids will not allow the mom to use a reverse mortgage.
Right.
So this poor mom is just living in paycheck, or I should say Social Security check to Social Security check. And it's just unfortunate because there is a solution right there in front of her. But due to the fact that they have not researched it or heard any good about this program, they aren't using it.
So Jim, for our viewers who don't know what a reverse mortgage is, could you just explain that a little bit more in depth?
Absolutely. A reverse mortgage allows someone to have their principal interest mortgage payments built into a loan that's a reverse loan, which means they are not paying money. It's just going to a loan that keeps increasing over time. Forward mortgage is when you do a regular loan because you're paying the loan down and it's paying the principal down. So forward means paying down, reverse means loan balance goes higher. In any of these examples of reverse mortgages, you don't lose your house. The government does not take your property. These loans are based on your life age. The older you are, the more equity or loan amount or loan to value you'll be getting from your property. So we do these loans up to $3 million in some of our proprietary products we offer. And it just allows, again, people to have flexibility and not have to feel like they have to count on their kids, or that they can enjoy their hard work. Right? If you live in a property for a long time, you should be able to stay there as long as you want. So reverse mortgages are going to be more popular. In the last 30 days, there's been more mortgage applications for reverse mortgages than there have been in the last 5 years.
Wow.
Oh, wow.
Month over month.
And that makes sense too, especially in this market. Besides reverse mortgages, what other type of mortgage programs do you guys offer for your clients?
Yeah, I'll talk about one that's popular right now to help your clients get into a purchase. If they own a property and they're looking to move, they're not comfortable selling and then going and buying later, right? That's not.
Thank you.
Yeah.
Yeah. Well, we have a program called a bridge loan that allows someone to buy before they sell.
Mm-hmm.
It's hard. Our whole goal as realtors and lenders is to help someone make a good decision off of all of the tools we have.
For sure.
So my whole goal is to create a call to action for them to do something, right? The worst thing is when they do nothing. A bridge loan allows them to create the mindset that they can go look for a property, knowing that they don't have to sell their current property. They can go look as much as they want to, and if they find something, fantastic. We may be able to offer a bridge loan that competes with all cash offers.
Wow.
All cash being a transaction that can close in as little as 7 to 10 days.
Yeah.
Which is pretty awesome. So this allows someone, again, to take their equity from their current property to be able to buy their replacement property, and then they have up to 12 months to sell their current house.
Wow. Okay. Not
So
that they'll need it, but
12 months.
good to have it.
But that way, you guys as the professionals, right, you can help them figure out if they should do new carpet or paint or just sell it as is, or you guys are the experts on the marketing plan around that.
Sure.
So it gives you time if you want it, and it gives them options, which is great.
So Jim, real quick, With that bridge loan, right? So say I have a client who owns a property out of state, and he wants to buy one in California. Is that still possible with that loan, that bridge loan?
It is possible, state by state specific, to make sure that we look at the state that their loan is in or their property is in, because some states have different rules for these programs.
Okay.
Yeah.
But I find this a lot right now with people in Santa Clara County moving over to Santa Cruz County. They're wanting to buy before they sell.
Yeah.
So we see a big surge in our local market of people moving from a higher price point to a lifestyle change, which happens to be a lower price point still for the most part.
Right.
That's why we see a lot more activity in our market in Santa Cruz County and Monterey County, because all these outside people know it's cheaper to live here and have a better quality of life. And maybe they're retiring or can work remotely. All those factors. COVID has had a role in the way we live and where people have migrated to. So we're seeing a lot of people move out of the state because they can't. So
very true.
Mm-hmm.
Cool. Thank you for that.
That's awesome.
Wow. Are there any final programs or anything you want to mention on?
Yeah, I'd love to share again. Working with local professionals is the name of the game.
Definitely.
Your realtors, your insurance providers, your lenders. You got to work with local people that know the market. And also their reputation sometimes can help. If offers are the same, maybe they've had a great experience or a bad experience with somebody. That may be a factor that the seller takes into consideration. Remember, it's the seller's decision, but a listing agent may, if given permission to share advice, they may go with the local professional that they know, is a good person in the community and does a great job. So I always feel like my company, All Cal Financial, which is now powered by INSTA Mortgage, we went from being a little guy to being national now, but we still have the mindset of being local where we live and just sharing tools and empower people like you guys. We want to be great partners and add value and not just be here for the handouts. So that's my goal and what we do in life, right? We got to help value add anyone's needs with different tools and resources. And that might not mean a paycheck to me, but it means someone's in a better situation. And that's what I love about this.
I mean, and to piggyback off what you're saying, it's not always about a paycheck. To me and for us, I can say, the paycheck is actually helping someone, helping a family achieve that goal. If it's just guiding them in the right direction or, helping them find a rental, in the meantime, before they make that next move.
It's definitely a common denominator that we all have, right?
Sure.
Yeah.
I remember my first loan I ever did. Her name was Sandra. Her last name started with E. I won't give her last name up.
Okay.
It was a loan in Reedley, California, which is near Fresno County. The loan amount was $32,000.
Okay.
I lost $5,000. I had to give the bank I worked for money to close that loan because this lady needed help and I wanted to help her. And, come a long way from there. We've helped thousands of people. And the key is you treat everyone with the same level of respect and dignity, and you get as excited as they are about buying a house. This is a big decision. I've owned now 18 homes in my career.
Wow.
Hold on. Say that again. Say that one more
Every
time.
you got to be excited about it, right? I got to put myself in the shoes of the homeowner because if I'm not there, I'm not given the same respect or perspective that I should have and be excited for things or be nervous about elements of it. I got to be there through the trenches with them, just like you guys through that experience. And that's what separates, I think, great professionals that care, that are passionate versus people that are in it just for the paycheck or the money.
Right.
Absolutely.
Jim, you glossed over that really quickly. How many properties have you owned or owned?
18. 18.
Dang, that is awesome.
And are those all like single family residences or like what? How big is that?
Yeah, great question. They've all been single family residences. And the best lesson I learned was the second home I bought was directly across the street from the house I lived in. So I thought it'd be perfect. I just go work on the house and it's all good, right? Well, when you rent out your house to college age students and you get home from work your phone gets lit up for come fix this, come fix that. So be careful what you wish for sometimes. So you never want to buy a house directly across the street from where you park.
Because they're like, why can't you come over? I see that you're home.
It's a good problem. It's definitely a good problem. But I've learned a lot of lessons along the way. And I think a theme that is important is sometimes also just because you can do something doesn't mean you should. And sometimes the power of the takeaway, sometimes telling someone, you know what, it's not the right time for you to do something. That's okay. Because again, I'm in this for the long run. I think I'll be in this industry for another 15, 20 years. I love it. Just got to have a passion for it because there are good days and hard days. And I respect you guys right now for having to drive, 20 miles and spend $50 for gas. It's not easy either. So I commend you guys for staying with this and staying in the game and seeing past the short-term hurdles and challenges we have for the long-term goal of being in this for long run.
That's funny you say that because we have an episode speaking on pain versus pleasure. How to, the pain right now of engaging in this market is too high for some folks. But for some folks, the long-term pleasure is worth engaging in this market. So, you have to have the right amount of, that fear is what it comes to. You have to be right in the middle of fear. You can't have too much of it where you don't engage, and you can't have too less of it where you're so courageous and you're making those purchases that you shouldn't.
I get butterflies every day still, and do I have to do loans anymore? Probably. I can do a lot less and be okay, but I enjoy it. I love it. It's an adrenaline thing. It's a energy thing. I get a lot of my drive off of seeing other people want to become successful or get to their dreams and goals. So
yes, sir.
That's why I love what I do.
You guys have any questions?
No, that was
pretty straightforward,
Yeah,
man.
It's pretty easy.
Thank you.
It's pretty easy when you love it, right? When you don't love it, it's hard, but it's easy.
I have one question for you, Jim. In this market, though, you touched on a lot, but for a first-time home buyer, what's one thing or what's some things that they can do to make their offers competitive in this market?
stand out. Mm-hmm.
Yeah, great question. So again, working with local professionals like you guys, number one. Number two, trying to tighten up their contingency periods as tight as they can, which means inspections or the having an appraisal or not having an appraisal, and then the loan contingencies. There are normally 3 buckets of contingencies. With first-time home buyers, I'm pretty sensitive to not get them in trouble, not to put them in harm's way. So it's harder on first-time home buyers because you want to protect them, having this be their first time doing this. But just going in with their best foot forward and knowing that if they start with their maximum amount and go with that because they know that they left it all on the table. I think that's what I would recommend is just go with your best offer first. In this marketplace, there may not be what we call a counter.
Yeah, you don't get a second chance in this market sometimes.
Very true. Very.
Yeah,
If you're a listing agent, you got 45 offers. That's a full-time job right there, just to go through all those. So
totally.
Yeah,
and it's not an exaggeration either. We've definitely seen that in our market where it's like 20 offers on one house, and it's insane.
Yeah. Well, I mean, we just met a gentleman out in Oakland at a realist mixer. And he had gotten 34 offers.
34 offers on
one property. So
on one property. He has 17 listings right now.
Yeah. He's got multiple listings, getting multiple offers. So it's the norm right now. So working with buyers is something that we counsel them and try to let them know, hey, when you come into this, as you mentioned, Jim, like you want to put your best foot forward, knowing that there's multiple offers. And that's kind of the thing as well that I try to articulate with my buyers that, they're constantly saying, oh, inventory is low. And I'm like, okay, but the flip side of that is that there's a lot of buyers. So anytime the property hits the market, it's flying off the shelf so fast that it seems that like inventory is super low. Couple that with the fact that we do have a housing shortage, then you are running into that. But
and this time of year, we should see a lot more inventory, right? People always say wait for the Super Bowl to be over because then husband and wife will go out together versus the husband being stuck behind or wife watching the game, whatever. then when you're past that, we should start seeing more inventory already hitting. We haven't seen, traditionally we've seen about 30% of what we would normally see. So the tough part about where we live, it's good and bad. If you're retiring and you've lived in Santa Cruz County or Monterey County, do you retire in Bakersfield or like New Mexico? Probably not, right? You're probably here
Not
in the long run, right? So the challenge is as the population gets older and more baby boomers retire, people aren't likely to put those houses on the market. So that's just my mindset. I wouldn't sell my house in Aptos right now. I think it would cost me double what I paid for my house just to find a similar comparable house. So I'm kind of stuck. Now I'm good with that. But people are going to be less likely to sell in certain areas if their life events allow them to stay. So.
Definitely.
True. Now, hey, I got a quick question. You spoke about contingencies and appraisals. So there are obviously a lot of lenders that the appraisal on the property is something that they have to get when it comes to purchasing. So what kind of ways can you set up the loan process or qualifying buyers to where you can move forward without needing an appraisal?
Great question. I like to leverage debt I like to optimize debt, which means if someone wants to put down 20%, that's fine, but I'm going to give them a second loan that has no draw on it for 10%. So I'm going to give them an 80% first loan, a 10% line of credit that's there for emergency funds or improvement costs or whatever they need, so that they can put their 20% down still, but they have a loan up to 90%, which is there for them down the road, like a rainy day fund.
Right.
I like to go with that mindset because if there is a situation where the appraisal does not appraise, then they're protected and they can bring in more funds, but know that they still have the home that they own.
Right.
Does that make sense? Like maybe it's an 85% combined loan to value, but they've put in their 20% number. So I'm always trying to maximize that. Big banks don't do that very well.
Right.
So we like to compete against big banks because it's just an easy thing. When you can customize your approach to someone's needs and you listen, you're going to be in a good situation because you're going to find a creative way to do what we do.
Right, most definitely. And that's why I prefer working with local professionals such as yourself, because I try to let my buyers know, hey, when you're coming in and you're trying to go get your approval, it's key to go out and speak with multiple lenders. Mm-hmm. Now, as you just mentioned in a roundabout way, when you go to big banks, they kind of have a boilerplate kind of system. And it's like, if all these boxes aren't checked off, then you're just like, no, sorry. But working with professionals such as yourself, you're going to go the extra mile and make sure that they really, you can find a route that best fits them to get them into where they want to be.
Yep, absolutely. We're trying to be the Nordstrom's brand. We're trying to give the extra concierge experience to let people know that we're trying to be creative and find the best solution for their needs, not the bank's needs, right? So we try to inspire, connect, and then help people make a good call to action for their long-term needs. And every day is a different day, and scenarios change, and people's needs change. And it's cool to look back. Over 8,400 families have helped. Wow. Think about all the wealth that's been created. I wish I got just a small amount of that.
Well, Jim, where can the people find you online? Are you on social media?
Absolutely. My website is pretty simple. It's JimBlack.com. Just like Meet Joe Black, meetjimblack.com. My best phone number is 925-285-4898. And our company, again, is INSTA Mortgage. And my local brand here is All Cal Financial, which is powered by INSTA Mortgage. And we serve 27 states, and we, every scenario is unique. So count on your favorite local professionals wherever you're looking to do something related to real estate. And that normally is a way better solution than some chatbot.
Yeah, definitely. For sure. Don't get too busy on us, though.
Yeah, right.
Sure. Right on, guys. Well, I appreciate your guys' time, and congratulations on your success. And I love these podcasts because us old dogs learn new tricks also listening to perspectives. So thank you for sharing.
Yeah.
That's what's up, man. Iron sharpens iron, shield sharpens shield, man. So we're going to make it happen.
All right. Thank you guys so much. And,
Thank you.
All right, man. Take care.
Bye.
Thank you.
Take care, guys. Bye-bye.
All right, guys. So that was our interview with Jim Black of INSTA Mortgage. We learned a ton of information.
Oh, yeah.
I personally learned something new speaking with Jim today.
Yeah, definitely. I feel like every time I talk to Jim, I learn something new.
And it's always like fluid, the conversation too, you know. And that's one thing that I always enjoy, like speaking with people that are on a more localized level. More person to person as well, because they're giving it to you straight. You know, and it's not in a roundabout way where you're feeling like, yo, like, are we speaking the same language?
Right.
You know,
He could really break it down in a way that you understand exactly what he's saying, even though he's like speaking in another language.
And he understands the area and what's going on.
Yes,
He's
which
seeing
is super important.
everything that's going on. He knows a bunch of the realtors in the area.
And he goes out there in person, checks out properties, and makes sure that everything is good. So he goes above and beyond, just like we do, which is why we're all paired up and energetically aligned.
straight up.
So guys, you heard today that it is important when you're picking a lender, make sure you pick local, and make sure you take the time to have a conversation with your lender. You know, figure out if they're the right fit for you, figure out if their programs suit your needs.
Consider your options.
You know, get with a local realtor such as ourselves. You know. But Vanessa, you want to wrap us up?
Yeah, so we covered a lot. Obviously, we loved having Jim Black on. I really hope that you guys got some value from that, because as you know, that's what we're here for. But if you guys have any more questions, always feel free to leave them down in the comments below. We're very active on there responding to people. So let us know. And also contact Jim Black, but don't get him too busy because I still need him.
Really,
For sure, guys. I'm Dennis Scott. You can find me at Dennis Scott Realty on Instagram.
And I'm Vanessa Estrada, Realtor.
I'm Sirrom Alizem. You can find me at Salazem_Realty on Instagram.
All right, guys. This has been another great episode of Real Life Realtor Podcast. We will